Hey guys, welcome to another episode of Stop Loss Investor. Today we're going to be uncovering Palantir, a new IPO on the stock market, and we'll see what it has to offer. So just to give an overview of what we're going to go through today, we're looking at the origins of Palantir, so the name, the company, and then we're going to go into their S1 filing that they did before they IPO'd, and we're going to have a look at the business model and the products that they have to offer and the current financial standing that they have, and see, look at the margins, look at the revenues, what is their potential look like, and from there we're going to have a look at the outlook of the company as a whole. So the origin of Palantir. So the name Palantir comes from the Lord of the Rings movie. So Palantir in the movie is an indestructible ball of crystal used for communication and to see events in the past or the future. And so Palantir was founded in 2003 on that idea and basically started building software for the intelligence community in the United States to assist in counterterrorism investigations and operations. They're currently headquartered in Denver, Colorado. It was founded by Peter Thiel, Nathan Gettings, Joe Lonsdale, Stephen Cohen, and Alex Karp. So the founding principles of Palantir is that systems should incorporate principles by privacy of design, decisions that can affect individuals' rights to freedom, opportunity, and happiness cannot be left solely to computers. Systems must facilitate accountability and oversight, and technology is not the answer to every problem. So with that being said, we'll have a look at the S1 filing, and there's a few things I want to cover when going through this S1 filing. I want to have a look at the stock structure controversy. The moment it IPO'd, a lot of commentators talked about this and how it's a bad idea, how it raises a lot of questions, and for the foreseeable future, people should be wary of owning Palantir. We're also going to be looking at what they talked about in terms of their sides they've chosen. They talk a lot about saying that they very much work with the democratic governments. I think they said they work with governments part of the NATO. So that's United States, United Kingdom, and basically all democratic countries. They also look at founder-led governance. So that's something that's part of the stock structure. So where the founders essentially had a lot of the voting power than the individual investor. Um, so just the founders, as in like three people, have more power than the millions of people who own the stock. And the emerging growth company disclosure that they did, where they, I guess, more or less refused to share some details with us about the company. They also talked about in the S1 the high customer retention and commercial and government revenues, and we can have a look at that and let's see how much it actually matters. And we're going to also look at the government contracts that they talked about and their lawsuit against the US Army, which they won. So with that being said, let's go into the S1 filing. So here is the filing. So we can see I basically copy and pasted it onto my Word document for ease of use. But yeah, I copied the whole thing. And so we can see that, uh, so if we have a look at the stock structure, we can see that they say in the original opening pages that we have two classes, and now I'm quoting Palantir's S1 filing. So they say we have two classes of common stock, Class A common stock and Class B common stock, and we intend to authorize a third class of common stock, a Class F common stock. This is a novel capital structure that differs significantly from those of other companies that have dual or multiple class capital structures. The rights of holders of Class A common stock, Class B common stock, and Class F common stock are identical except voting, transfer, and conversion rights. Each share of Class A common stock is entitled to 1 vote. Each share of Class B common stock is entitled to 10 votes and is convertible at any time at the option of the holder thereof into 1 share of Class A common stock. Each share of Class F common stock will have a variable number of votes as described further in this prospectus and will be convertible at any time at the option of the holder, therefore, into one share of the Class B common stock. All shares of Class F common stock will be held by a voting trust established by Alexander Karp, Stephen Cohen, and Peter Thiel, our founders, pursuant to a voting trust agreement, the founder voting trust agreement. Our founders will also be the party to a voting agreement, the founder voting agreement. So, as long as our founders, who are then party to the founder voting agreement, and certain of their affiliates collectively meet a minimum ownership threshold on the applicable record date for a vote of the stockholders, the Class F common stock, together with the founder voting trust agreement and the founder voting agreement, will give these founders the ability to control up to 49.999999% of the total voting power of our capital stock. And the founders may, in certain circumstances in the future, have voting power that in the aggregate exceeds 49.999999%. This means that for the foreseeable future, the control of our company will be concentrated with our founders through our Class F common stock, notwithstanding the number of outstanding shares of Class A common stock and Class B common stock. End quote. So, yeah, so basically the founders, Alexander Karp, Stephen Cohen, and Peter Thiel, upon this voting trust agreement and the founder voting agreement, as long as they are in a party together and whenever there's a vote, they have the power of 49.99999%, and the rest equal to that much. So each of the votes is essentially like 50% divided by 3. That's each of their votes, while all of our votes is 1 for every share we own. So that's why they have variable voting. They're going to say because at any one time they could own less shares, no shares. Sorry, they can own like less shares than all of us, but they'll still have more voting power than all of us. So that's essentially the controversy there. We're going to go further into that to have a look at how they lay it out in terms of the founders, who owns what when, which is done in a table, which we'll look at further in this video. So from there, I want to go into the emerging growth company, which is, as the term is defined in the Jumpstart of Our Business Startups Act of 2012, and as such, we have elected to comply with certain reduced public reporting requirements for this prospectus and may elect to do so in the future filings. So that's their emerging growth company disclosure, where they can reduce public company reporting requirements as they see themselves as being a emerging growth company. That's another thing that caused a lot of controversy because we don't exactly know what they do or how they do it. We only know as much as they're are willing to share with us. So yes. So from there, moving on. Another thing that they talk about is that because there's a lot of controversy with them owning data and like people wondering, they have all this data on us and they're able to use all this data. The thing is, from the start, they have repeatedly said that they turn down opportunities to sell, collect, or mine data. Other technology companies, including some of the largest in the world, have built their entire business doing that. So that's just a disclosure that they said. So they don't actually collect any data. They don't sell the data that they work with, and they don't mine data from sources. They more or less have softwares that can perform data analytics, and what they do is they go to companies and they go, we see that you have all this data and we see that you haven't, you might need some help using that to make your company more efficient, make your processes more efficient. We can help with that data analysis technology to find patterns, find certain things, and we can help you get a better understanding of your own business model and where you should be allocating funds or how you should be thinking about moving forward into the future. But they don't actually take any data from them and keep it for themselves and they collect it or sell it or mine it anywhere else. They just provide the software that can perform data analytics more or less to companies, data scientists, and they can use Palantir software to, uh, I guess, look for more insights into their own company. So they don't. So Palantir doesn't involve any data collection. That's basically what they're trying to say. Unlike Google, unlike Microsoft, Apple, Facebook, these companies put a platform, allow users to use a platform, and from there they can collect data on the users, and then they sell that data to advertisers. That's basically their business model. The FANG stocks, but Palantir, they give the data, they give the analytics software that these companies do have as well, but they give this to other companies and go, you can use it to find insights into your own company. And we have our software engineers who can help you achieve that, and they can work hand in hand with your data scientists to get efficiencies out of your company. So they go on to say that their strategic relationships for their top 20 customers by revenue have been with them for 6.6 years. So, so their top 25% customers by revenue have been with them for 6.6 years. So these are long-term relationships. They're not um, stopping, like they're not giving our software for 6 months, taking it back, going to another company. The companies who use their software keep using it, keep getting better, and keep generating more revenue for Palantir. So that's a good thing for the company. And they're also going to say that they have chosen sides. So our software, they say, is used by United States and its allies in Europe and around the world. Some companies work with the United States as well as its adversaries. We do not. We believe that our government and commercial customers value this clarity. So Palantir doesn't, so it only works with the United States and its allies in Europe and around the world. So as I said before, democratic nations, they only work with them. Whilst we see that Google's used in China, Apple's also in China. So they all obviously collect data there and as well, and they provide. We don't know if they do or not, but they work with them. So Palantir does not, as it could be detrimental to government as a whole or to democracy in their eyes anyway, if these the tools that they've built go into the wrong hands, which is very similar to the movie. Okay, so becoming the default operating system for data across the US government. So the next point I want to highlight is that their successful lawsuit against the US Army brought in 2016 is transforming the way the entire US government buys software, not just the military. They say that they're working towards becoming a default operating system across the US government and that their victory in the federal court now makes that possible. We're going to go further into that victory and see how that affects their revenues. There we go. Now we're on to the class structure. So I'm quoting again from their S1 filing. So the multi-class structure of our common stock is intended to preserve our existing founder-led governance structure after completion of our listing on the NYSE to facilitate our continued product innovation and the risk-taking that it requires to permit us to continue to prioritize our long-term goals rather than short-term goals, short-term results, to enhance the likelihood of continued stability in the composition of our board of directors and its policies, and to discourage certain types of transactions that may involve an actual or threatened acquisition of the company. So yeah, so the reason for them having that founders trust is that they believe that the founders look at the long-term side of things and for the company, and as well as that previous statement about the democratic nations only working with them. So they don't want to be bought out, have a majority shareholder from another company, from another country. We know that China has a lot of If we look at companies such as SoftBank and even though SoftBank's owned by Japanese CEO, but basically the same thing. If they don't want other countries and other companies buying shares of Palantir to gain a foothold into their governance and into their voting structure. So that's why they did this founders trust. Well, that's what they say anyway. Okay, so, and they go on to say the risk of this is obviously, conversely, this concentrated control could allow our founders to consummate a transaction that our other stockholders do not support. Moreover, our founders may support and may cause the election of directors who support long-term strategic investment decisions and risks that may not be successful and may seriously harm our business. So yeah, so if for whatever reason, if they have a bad day and make a wrong decision, that could seriously affect the company, and we can do nothing about it because they hold more voting power than us as retail investors or even institutional investors. They hold more power than anyone else in the company. So now we're going to have a look at that voting structure I was talking about. So here they pull up a table. It's quite confusing, but I'll try and make it easy for you guys and for myself in the making. So I wrote a note here, so that's good on me. So the following illustrated table assumes that the voting power of our founders and that are then party to the founders voting trust agreement and the founder voting agreement, inclusive of the voting power of any designated founders excluded shares, is in the aggregate equal to 49.999999% of the voting power of all outstanding shares of our capital stock, and therefore the voting power of all other stakeholders in the aggregate would equal 50.000001%. Accordingly, the voting power of all other stockholders who do not then party to the founder voting trust agreement and founder voting agreement has been calculated below 50.000001% of the aggregate voting power of all our outstanding shares of capital stock. So yeah, so that's the thing. So for us, Class A stockholders, the retail investors, we have one share per one stock, while the founders more or less have 50%, regardless of how many shares that they hold in the company. They get a 50% voting power. So as I said, if a member of the voting trust is removed, then the other members of the party get the majority voting ability, ruling out all other stockholders. And originally, all of the stockholders would have to agree for them to have a voting power over the founders' voting trust. Me personally, I'm happy with Thiel and Karp making decisions on my behalf. I watched all the interviews by Peter Thiel, and I've read his book. Fantastic book, by the way, 0 to 1. And I've watched the videos from Karp as well. He's a fantastic person, thoughtful person, very forward thinking, and I'm happy to put my shares in the company. I have put a lot of shares in the company. I've bought a lot of shares in the company, and I'm happy to keep that there and have them make the decisions for the future. So if we have a look at the voting structure, so if Karp, Cohen, and Thiel are parties of to the founding voting trust agreement and the founder voting agreement. So Karp, Cohen, and Thiel. Okay. So yeah, so it's quite a complex piece of voting structure, but the idea is if one of the members drops out, so if you look at this one, if Mr. Thiel withdraws or is removed from the founders voting trust agreement and the founder voting agreement, Karp and Cohen, so voting power of the founder voting trust directed by a majority of the founders, then party to the founder voting agreement, they get 49.999999%, and total voting power of the founders is 65% essentially. So if one of them drops out, their voting power increases. And this is the same for literally all of them, as you can see. It's only not the same when all three of them together. If Mr. Thiel withdraws, 65%. Mr. Cohen withdraws 52.2%. Mr. Card withdraws 56.1%. And if Mr. Carp is the last remaining, he gets 66%. Mr. Cohen, 68%. Mr. Thiel, 57.8%. So yeah, so they're only, if you're focused on the voting side of things, and if we all vote together on the idea, um, the only way we can have a voting power over them is if all three of them are together in the founders voting trust agreement. And obviously, on these decisions where it could be detrimental to the company, one of them could just drop out, like withdraws or is removed. So they can withdraw. So they can just walk away from that agreement. Obviously, they'll have their own things that they have to do, like maybe let go of the shares and things like that. But regardless, they obviously believe in each other's ability to make the right decision for the company. So if it comes to a point where one of them has to drop out, they will, if it means the company will move forward in their vision. So I didn't even know this was possible, but here we go. Yeah, so that's that. The founders voting trust. So yeah, so essentially we can only make the decisions as if we work together as a group and they all stay together. And if it comes to a point where we all work together as a group and they don't like the idea, the founders can, one of the founders can just leave, and the other two, they get the majority voting power. So yeah. So this is what they essentially said. So multiple class structure of our common stock has the effect of concentrating voting power within certain stockholders, in particular our founders and their affiliates, which will effectively eliminate your ability, the stockholder, to influence the outcome of important transactions, including the change in control. The Founders Voting Trust Agreement and the Founder Voting Agreement also have the effect of concentrating voting power with our founders and their affiliates, which will effectively eliminate your ability to influence the outcome of important transactions, including a change in control. Okay. So now we move on to the emerging growth company side of things and have a closer look at what that means for the company, because this allows them to reduce their reporting requirements. So let's have a read at that. And I'm quoting one more time. So we are an emerging growth company as defined in the Jumpstart Our Business Startups Act of 2012, Jobs Act. An emerging growth company may take advantage of specified reduced reporting requirements that are otherwise generally applicable to public companies. These reduced reporting requirements include the requirement to present only 2 years of auditing financial statements and only 2 years of related management discussion analysis in the prospectus, the ability to elect to delay compliance with new or revised accounting standards until they are made applicable to private companies, an exemption from compliance with the auditor attestation requirements on the effectiveness of our internal control over financial reporting. Oh, wow. Reduced disclosure about our executive compensation arrangements, and an exemption from our requirements to obtain a non-binding advisory vote on executive compensation or shareholder approval of any golden parachute arrangements. Not too sure what that means, but yeah, so I think most people are aware of I believe their CEO, Alexander Karp, was asked, or the company was asked, about their involvement with the operations on, Bin Laden, and they never denied or affirmed that question, basically saying if they were helped in finding Bin Laden. And obviously that happened prior, more than 2 years ago. And there's also a few other things that they've done in terms of ICE. I believe there's a few other things that they did where they use companies technology to uncover a lot of things. They also uncovered virus on Dalai Lama's laptop, which I believe in a reporting was said to be from Chinese hackers. So the company was able to reveal all these things. And so obviously these things would have to be, even if not stated, would have to be shown in the public statements of the company. And as you know, over the last 2 years, not much has happened. They probably had simple contracts in terms of helping in the Iraq area where there's wars, and obviously with commercial businesses where they do their where they use their softwares. So yeah, so they only decided to report everything from 2018 onwards. They haven't reported anything from 2003 till now, which, you know, the company's been alive for 17 years, and they only basically showed the retail investors 2 years, and basically everyone else 2 years worth of statements and analysis and discussions about the company. So wow. So yeah, they're going to say, we may take advantage of these provisions until we are no longer an emerging growth company. We would cease to be an emerging growth company upon the earliest to occur at the last day of our the last day of our fiscal year in which we have more than $1.07 billion in revenue, in annual revenue, and the date we qualify as a large accelerated filer, which will occur as of the last day of the fiscal year in which we have been subject to SEC reporting requirements for at least 12 months. We have filed at least one annual report on Form 10K, and we have at least $700 million in equity securities held by non-affiliates as of the end of second quarter of that fiscal year. The date of which, third is the date of which we, in any 3-year period, issued more than 1 billion non-convertible debt securities, or the last day of the fiscal year ending after the 5th anniversary of our listing of our Class A common stock on the NYSE. So we may choose to take advantage of some, but not all of these reduced reporting burdens. We have taken advantage of certain reduced reporting burdens in this prospectus. Accordingly, the information contained herein may be different than the information you receive from other public companies in which you hold stock. Fair enough. It is a company that has communications and ability to spy, ability to look deep into someone's data and understand the patterns of certain structures. So it's fair to say that they have their reduced reporting. Okay, from there we go on to their business, and then their high customer retention and commercial versus government revenues. So they're going to say that they have generated a total of $3.4 billion in revenue from 2008 through to 2019. So in 10 to 11 years, they generated $3.4 billion in revenue. And in 2019 alone, the revenue was $742.6 million. So in 2019, they received essentially a quarter, 1/5 of their revenue. So over 10 years, 1/5 of the revenue came from last year. Wow. So, and they say that represented a 25% growth rate over 2018. And this growth has accelerated in the first half of 2020, a period of significant geopolitical instability and economic contraction, due to COVID-19. And we generated $481.2 million in revenue, reflecting a 49% growth rate in the first half of 2019, when we generated $322 million in revenue. Fantastic. And our average revenue per customer in 2019 was $5.6 million. That figure has increased at a compounded annual rate of 30% since 2009, as we have extended the capabilities of our platforms, expanded existing customer relationships, and acquired new customers. And a big part of this revenue growth is also the fact that they won that case court against the US Army. And I'll go about that in just a moment. So yeah, so they're going to say that 50% of their revenue came from commercial customers, 47% came from government agencies. So they're trying to expand into the commercial sector, which would be good. If then they won't be affected much by who's in the presidential office and the policies that they can affect, if they're more focused on the commercial side of things. Okay. Okay, here we go. Here's the specifics of government contracts and their lawsuit against the US Army. So, with regards to the government contracts, so when calculating the total value of such contracts, Palantir does not include government contracts totaling $2.6 billion as of June 30th, 2020, that we have been awarded, where the funding of such contracts, also known as indefinite delivery, indefinite quantity (IDRQ) contracts, has not yet been determined. Funding of such contracts is not guaranteed. The majority of our government contracts are subject to terminations for convenience provisions, and the US federal government is prohibited from exercising contract options more than 1 year in advance. As a result, there can be no guarantee that our contracts with government customers will not be terminated or that contract options will be exercised. So, yeah, an important point regarding the philosophy of the government, whether they are Democratic or Republican. So, obviously, if they're Democratic, um, they're going to be less happy with these kind of technologies being in place. Obviously, we've seen that with the Republican government, with President Trump being in the office. Uh, they have been used, like the ICE agents that President Trump has ordered for unidentified persons in the United States. They basically use Palantir to find them, undocumented persons, and they use Palantir to find them and essentially, I guess, see to them as to what to do with them because they're not legally able to be in the United States. And furthermore, and now we look at the actual lawsuit against the US Army. So our momentum in the US government sector has accelerated since 2018, following our successful lawsuit against the US Army to enforce the Federal Acquisition Streamlining Act of 1994. So the law requires the US federal government to consider commercially available software before attempting to start custom development projects on its own. That's awesome. And the outcome of the lawsuit has transformed the way in which US military purchases software on behalf of its soldiers and service members. So the court ruling and ensuing shift in the government procurement affects the entire US federal government, not only the military. So Palantir believes that this broader shift in government procurement will be a significant factor in their ability to capture an even greater share of total addressable market, given that the purchase of Palantir platforms can be funded through either information technology, operational, or other government budgets. For example, the US Department of Defense will spend an estimated $144 billion in fiscal revenue 2020 in fiscal year 2020 on procurement and $105 billion on research and development, testing, and evaluation. Palantir believes that their software is relevant and can contribute to programs covered by both of these budgets. So that's one thing that's been big against Palantir, where a lot of the criticism came from the fact that they couldn't generate a profitable. They haven't turned a profit in 17 years. So that's the big thing, saying that. But we can see that because of these kind of issues where where the government was allowed to build their own, so they could build their own. So and they didn't need to use Palantir software, and they did not have to. They have no need to do that. But with this court case, it becomes kind of has to. If Palantir can provide the government with the software that kind of solves their problems, they would have to use that software over their own custom built products, and they would have to work with Palantir and their software engineers to build that product to their level because it's already a viable product for them. So they can use the viable product and then build on top of it for further integration into their operations. And they don't have to, go ahead and the government doesn't have to build their own products to do this. And this is something that they can do on the whole of the United States government. And they can, as you see just then, that's $144 billion in procurement, $105 billion in research and development, and that could all go to Palantir essentially. We've seen that over the past a few weeks after their IPO. There's been reporting that they've won multiple contracts with the government, some in hundreds of millions of dollars. So this is something that can go a long way into the future of Palantir, and could also help them in terms of with the other democratic nations where if they end up working together, if the United States and United Kingdom work together, obviously if the United States is using Palantir for their operations, it would be better if the United Kingdom uses them as well, because the United Kingdom most likely would have their own little software custom built products. But if Palantir is already very much integrated into the United States operations, it makes sense for the other countries who are working with the United States to use Palantir into their operations and integrate further for more cohesion between the countries. So that's a little something that can go a long way. So that's great to see. So they say that for years, Palantir struggled to make significant inroads in selling their software to large segments of the US Army. This was despite consistent demand from the soldiers on the front lines for the capabilities of our platform to offer. Soldiers from more than half of the Army's brigades asked for our software, but their requests were often delayed or denied by the government. So in 2016, so only 4 years ago, so they've been alive. The Palantir, the company's been in operation for 17 years, and only 4 years ago did they get the opportunity to be an operating system for the U.S. Army. Before that, it was more like yes or no. Yeah, we don't want to. They delayed it. They denied it. And so in 2016, Palantir won the lawsuit against the Army, challenging its decision to pursue a software development contract for the replacement of its battlefield intelligence system. In 2018, the United States Court of Appeals for the Federal Circuit upheld the ruling and directed the US Army to consider existing commercially available products, whether rifles or software, before trying to build their own. That's a really good thing for all companies, to be honest. If a company outside can provide a better product, then the government has to use their products, which is good for the company, good for the government, good for the country as a whole, where there's more cohesion between businesses and the governments. And we can see how it changed. So if we look at this, $0, 0 million, lol. So there are 0.6 million, 2.5, 2.3, 5.3, and then 6.6. And we can see the moment that in 2018, when they got that Court of Appeals overturned or ruling in their favor, their revenues more than 10x'd, and the half after that they went up by nearly 50%. So it's quite a jump. So when people use the revenues as a form of argument against Palantir, I don't think going forward into the future it'll be a good argument, because looking at this now, the US government has to use their products, and it's across the board. They would have to use their products if they see it as a commercial option, and before building their own. So that's fantastic. Okay, going from there, I want to go into the next part of the business model of Palantir and look at what the company can offer, what their products are, and how is it integrated into the business. We can see that they won the court rulings, they're getting the revenues from the companies, and they're very much a growing company. So we can see, let's try to understand the products. They're very secretive company. They haven't let much. I mean, the only thing I can find on them is the interviews done by Alex Karp and their S1 filing. That's all I can find on them. And their website doesn't offer much insights either. It's more, it's very much marketed material, as you expect. Okay, so now going back to the presentation here, Palantir's business model and revenues. So they're a software platform. That's what they are. It's a very basic business model. So customers pay us to use the software platforms they have built, which is, I guess, easy for me to, project out into the future as to see how they would go ahead. So Palantir's business model with respect to acquiring, growing our accounts has three phases: acquire, expand, scale. So that's the three phases of their business model, and I'm going to go further into that soon as well. So their revenue, all the revenue comes from essentially the one source. It's not like a different, because you need all three. So if we have a look at their revenues, we can see that there's Palantir Cloud, on-premise software, professional services. So Palantir Cloud subscriptions, so it's a subscription model, grants customers the right to access the software functionality in a hosted environment controlled by Palantir and are sold together with stand-ready O&M operational and maintenance services. So that's their cloud platform where they can issue their software such as Gotham and Foundry, which is their actual software that the soldiers or the other companies use to kind of use their data analytics. So O&M services such as Gotham and Foundry include critical updates and support, maintenance services required to operate the software, and as such are necessary for the software to maintain its intended utility over the contractual term. Because of this requirement, Palantir has concluded that the software subscriptions and O&M services, which together are referred as on-premise software, are highly interdependent and interrelated and represent a single distinct performance obligation within the context of the contract. And they also offer professional services, where this is more their consulting side of things. So for a long time, what would I call them? Questioners, doubters of the company. You just saw them as a consulting company. They basically have their software engineers who go and work with other companies' data scientists to kind of help them make sense of their data that they have. But now with their own softwares that they have to offer, because on Gotham side of things, that's more for governments to use. On Foundry side of things, that's more for commercial commercial companies to use. And on top of that, they have the professional services. So they're not just a consulting company anymore. They have their softwares, and companies can just go with the software and pay on a subscription basis to use the software. So with professional services support, the customers use of the software and include as needed on-demand user support, user interface configuration, training, and ongoing ontology or a graph representing the knowledge of that concept, and data modeling support. Professional services contracts typically include the provision of on-demand professional services for the duration of the contractual term. These services are typically synchronous with Palantir Cloud or on-premise software subscriptions. Professional services are on demand, whereby Palantir performs services throughout the contract period. Therefore, the revenue is recognized over the contractual term. So yeah, all the revenues go into the one thing. It's not like if you look at a company such as Google or Facebook or Apple, they don't have a different type of revenues for subscription-based models, such as their if you look at Apple, their Apple subscription revenues, the App Store revenues, and then we have at the actual the products that they sell, like iMacs and iPads, and so Palantir doesn't have that. They all come into the same thing. The moment that someone buys something from Palantir, they get the cloud software. They get the cloud subscription, so they pay for that, and then on top of that, they get the premises software. So through that subscription, that covers the software premises, and then they also have the professional services, which is something that they all go together. So it's not Palantir Cloud and on-premise software is one thing, and their professional services are another thing. They all come together, and they all are used to roll out and help customers gain more insights into their data. So the products that Palantir offers is Gotham, Foundry, and Apollo. So Apollo is Palantir's continuous delivery system that powers their software platforms. Apollo is its own software platform that sits between their applications and the underlying infrastructure. Gotham is Palantir's, which basically serves as an organization's knowledge base containing the full record of an organization's data, intelligence, and insights. Features including graphing, mapping, object explorer, and browser. So this is mainly used by governments to gain insight into, counterterrorism, fraud, and other services within the government space. Foundry is more used as a commercial offering, so where users can manage data and business logic in tandem. Business logic codifies the knowledge that holds an organization together. Palantir Foundry manages business logic in tandem with the data it runs on, so that as logic evolves, insights do too. Users can always trace the insight back to the data and logic that feeds it. So this is more for businesses. And we can see in the picture that they have Apollo in the middle, and then they have on the right there Gotham and Foundry as a service as a subscription. Sorry, subscription as a service. SaaS. Yes. So yeah, so Apollo, what Apollo does is they can do updates on the go for their customers, so they don't have to wait and roll out an update and wait. The customers don't have to wait for the products to update. They do it on the go as the customer's using them. And this is their overarching industry trends and their reason moving forward. So in terms of the alpha versus beta, buy or build, embrace or resist complexity. So this is big in the government space where they buy or they build. So they see that the broader industry trends in terms of governments and businesses, they expect more customization versus standardization. If we look at services provided by Google, if we look at services provided by Facebook, Apple, Microsoft, everyone uses the same exact service. When I use Microsoft Outlook, I use it exactly the same as a CEO or as a government an employee would. It's mail, like so it's not that complex to use. And if we look at services such as the search engine, or if we look at the App Store, if you look at the products that people build, they all serve the same purpose. So an iMac used by me and an iMac used by another person, there's no difference in that. Even in the software side of things, it's all the products built by all these other companies are used as a standardization. They're just sending it out there, and you use it for your need, then you let it go. And then as another company comes on, you buy their software, and another company comes on, you buy their software. While Palantir focuses more on customization, and as I said, with their Apollo feature, they can do onboard continuous delivery of their software and updates. So as you're working on the software, you could talk to a software engineer on the ground with them and allow them to make updates to the software to help the customer get what they need out of the software. And they're customized mostly on the actual business use cases rather than just throwing it out there and you use it a little bit for what you need, and then most of it you don't use it. I hope that makes sense. So the total market opportunity that Palantir has, they estimate it at being $119 billion. So on the commercial side of things, this estimate is arrived at by multiplying the number of potential customers around the world, approximately 6,000 companies with more than $500 million in annual revenues, by an assumed annual contract value for each potential commercial customer based on organization size and Palantir's internal data of existing customer spending. And on the government side of things, Palantir estimates a total addressable market in the government sector, including the government agencies in the United States, its allies, and in other countries abroad, whose values align with liberal democracies. Big statement, which is evaluated at being $63 billion. So as I said before, once the United States uses this and it becomes a big part of their operations, day-to-day operations in terms of the data analysis that they use it for. I mean, think about the Postal Service, think about the law enforcement agencies, even in terms of court cases. I can't really think of much else, but there's probably a lot. There's a lot of things that they could do on the government side of things with their technology to help the governments be more efficient in their decisions for their constituents. And this can be said not only on the fraud side of things as well. And they can use that ability to merge with their allies and the liberal democracies to use Palantir because it is used by the US government. And so it is their software. It is a commercial software, but it is offered to the government. So they can, countries such as United States, United Kingdom, countries in the European states, and other liberal democracies can use this Palantir as a as a trustworthy company because the US government uses it. So looking at the products, Gotham. So if we have a look at to see what Gotham offers, it's very scary to see what Gotham can do. And it's also quite you feel safe and unsafe at the same time. That's all I can say about that. I mean, it's like, just look at that. What is that? That's Google Maps, but it can track and trace anyone. Actually, just before we go into that, I'm gonna have a look at the business model a little bit more. So as I said here, there's the acquire phase, expand phase, and the scale phase. So on the acquire phase, so in 2019, Palantir says they generated $742.6 million in revenue, of which 0.6 came from customers in the acquire phase, and 176.3 million came from customers in the expand phase, and 565.7 million came from customers in the scale phase. And we know that the scale phase is the final phase for them because it's the third on the list, and that we already established that on average, the top 25% of revenues, the customers who give the top 25% of revenues, they stay with the company for 6.6 years on average. So that's a third of Palantir's lifetime. So they started in 2012, and they're still using it, and they generate $565.7 million in revenue. So very big for the company. And so if we have a look at the acquire phase of things, so Palantir said that they actively pursue discussions with existing and prospective customers in order to identify ways in which their customers can provide long-term in ways which Palantir can provide long-term value to their customers. So in the acquire phase, they typically acquire new opportunities with minimal risk to their customers through short-term pilot deployments of their software platforms at no to low cost to them. So we can see why in 2019 they only generated 0.6 million, so $600,000. That's all they got from the acquire phase. It's because they give the platforms out for free, more or less, and just let them try it out, see how they go, see if it's right for their business, see if the Palantir software engineers can work with their data scientists to see how they can customize it to their needs, to that specific business needs. So that's what they do in the acquire phase. And so low revenues is not a problem because once they get into the expand phase and the scale phase, the customer more or less stays with Palantir. Just going to take a little sip of water. So Palantir defines a customer or a potential customer as being in the acquire phase if, as of the end of a calendar year, Palantir has recognized less than $100,000 in revenue from the customer that respective year. Customers may make nominal payments in connection with the evaluation of Palantir software that Palantir does not consider material in evaluating the performance of their accounts. So Palantir evaluates the success of a customer account in the acquire phase based on the revenues such accounts generate in the following year. So in 2019, Palantir generated $0.6 million in revenue from customers in the acquire phase, which yielded a contribution loss of $65.4 million. How does that happen? Well, they're giving out the software for free. They are giving out the software engineers for free. We can see that their revenues come from the cloud, the software premises, and the professional services. Obviously, they would still have to pay for these services, Palantir, to keep these going. And definitely a professional services side of things where they send out software engineers and other employees to work with the company. They would have to pay them, but the company wouldn't pay Palantir much as they're just trying out the product. So yes, so in first half of 2020, those same customers the same customers who generated 0.6 million in revenue in 2019, in the first half of 2020, they generated $18.8 million in revenue, which yielded a contribution loss of $13.9 million. So the top 25% of acquire phase customers by revenue at the 31st of December 2019 generated 65% of the total H1 first half of 2020 revenue generated by all customers in the acquire phase as of December 31st, 2020. So we can already see the advantage of the understanding of the phases of the company. Even though they only used it for more or less 1 year or 1 year and 6 months, the companies who do use it, they use it more and they generate more revenues. And obviously, sooner or later, they're going to be going into the expand phase of the business and they're going to generate even more revenues for the company. And then they're going to go into the scale side of business. And as they go more into the company, because we got to understand this is data. So as the company just, goes about their daily business and collects data from customers, makes transactions, whatever, they use Palantir more to find more insights into their own company operations. And they use them more and more and more. As there's more data builds up, Palantir can use more. Palantir becomes more useful, really. So that's a fantastic thing to see from the company. And if we look at the expand phase, so they go on to say that their investment in the second phase, the expand phase, is often significant as Palantir seeks to understand the principal challenges faced by their customers and ensure that their software delivers the value and results. So in the expand phase, they define a customer as being any customer from which Palantir has recognized more than $100,000 in revenue in a calendar year, and whose account has had a negative contribution margin during the year at issue, as determined as of the end of the year. In this phase, Palantir operates at a loss as measured by contribution margin in order to drive future revenue growth and margin expansion. Fair enough. In 2019, Palantir generated $176.3 million in revenue from customers that were in the expand phase as of the end of that year, with a contribution margin of negative 43%. In the first half of 2020, those same customers, once again, generated $160 million in revenue, which came to a contribution margin of 35%. That's fantastic. That's great to see, because they turned a negative margin into a positive margin in 6 months from the same customers. So very sticky business. So essentially in that phase, their sales and marketing goes up. That's essentially what they're trying to say. In the expand phase and the acquire phase, their sales and marketing become a really big part of their revenues. That's why it's their contribution margin as a key indicator for the company. Because if we look at what the contribution margin is, so Palantir defines contribution margin as revenue less their cost of revenue and sales and marketing expense, excluding stock-based compensation, and then take all that and then divide that by revenue. So we're going to look at the number side of things of this towards the end of the video, where I'll look at the financials and go over the future outlook of the company. but this is essentially their contribution margin, their key indicator, key performance indicator. So contribution margin as revenue less their cost of revenue. So revenue minus their cost of revenue and sales and marketing expense, excluding stock-based compensation, and then all of that divided by revenue. Okay, so now if we move on to the scale phase side of things, so this is their biggest revenue driver. So they say that as customers' accounts mature, our investment costs relative to revenue generally decrease, while the value of our software provides to our customer increases, often significantly as usage of the platform increases across the customer's operations. In this third phase, after having installed and configured the software across the entire enterprise, customers become more self-sufficient in their use of the platform, including developing software and applications that run on top of the platforms. Wow. While still continuing to benefit from the support of our operations and maintenance services. So yeah, so customers can do their own on top as they please and add to the services that Palantir offers. And obviously they can get the professional services from Palantir and add further to it. Look at more insights. Obviously the software engineers of the company of Palantir would know more about the software that they built than the person who uses it. So they can get the services from the software engineers from Palantir and work in-house with the software engineers of say a Airbus, or what are the companies that they use? They used I think it's Ferrari is another one company that they used. I think they used a few companies in the drug space where they helped in terms of trying to find vaccines or cures, or trying to see how a company can develop drugs to help their the community. So that's the thing. So so software engineers of the company itself can develop software on top of this software that Palantir has given to them. So they go on to say that in the scale phase that Palantir's partnerships with customers where they generally see contribution margin on particular accounts improve. So in 2019, they generated $565.7 million in revenue from customers in the scale phase with a contribution margin of 55%. In the first half of 2020, those same customers generated $296.3 million in revenue with a contribution margin of 68%. So as I said before, contribution margin looks at their cost of revenues and their sales and marketing expenses. So as the customers in the scale phase, sales and marketing becomes less. They're using the software. They don't need sales and marketing anymore. They know what they're looking for, and they can just speak with the professional services side of things if they want to get more support. So those expenses of sales and marketing goes down, and we can see margins improve. And so they go on to say from there that the top 25% of customers by contribution margin in the scale phase as of the end of 2019 had a contribution margin that year of 87%. So those customers generated $110 million in revenue in 2019, or 20% of the total revenue generated by scale phase customers that year. In the first half of 2020, the top 25% of customers by contribution margin in the scale phase as of the end of 2019 had a contribution margin during that period of 89%. Those customers generated $101.6 million in revenue in the first half of 2020, or 34% of total revenue generated for the first half of 2020. By all customers, the scale phase as of the 31st of 2019, of December 31st, 2019. So yeah, so these scale phase customers go a long way towards the revenues and margins of the company and the future growth. As the customers in the scale phase, they're not coming and going, they're ongoing users, and there's very much a stickiness to the platform that they're using. So it is clear to see why there would be a consulting firm as well as the customer starts operations on their platform and they have the opportunity to work with the specific customer needs and roll out features for the specific problem. And on top of this, they provide a software as a service operations and maintenance, much to the likes of Microsoft and Apple. And I've chosen those specific companies as their operating system. So when companies use this Palantir software in their company's data integration side of things, it becomes their operating system to manage data. So they can't really use any other. Um, there's no point in using other companies because if they need anything, they can just call up the professional services side of things. Obviously, it's not as simple as that, but they can look at the professional services and see what they can offer to make it more customized to that particular business. Okay, very interesting indeed. And so with that being said, I'm going to go on to the actual products that they offer. So there's Gotham and then there's Foundry. So we can see that this platform enables users to identify patterns hidden deep within datasets, ranging from signal intelligence sources to reports from confidential informants. Okay. It also facilitates the handoff between analysts and operational users, helping operators plan and execute real-world responses to threats that have been identified within the platform. Gotham is now used broadly across government functions. Palantir also offers Gotham to their commercial customers, including to those in the financial services industry in connection with fraud investigations. So I guess this would be a big thing when it comes to companies such as MasterCard and Visa. Obviously, they have their own fraud um, services that they offer, but if they ever need help, they can call up Palantir. I mean, because Palantir doesn't use their own data. They just have the data analytics software to be like, hey, you got data, I got the analysis, let me help you. And obviously all the financial services industry, like all the banks and any other, even, if you look at airports and uh, airplane companies, they can use Palantir to identify potential threats. When it comes to transportation and, even companies such as Uber can use Palantir when it comes to safety and regulation of their services. So they have Graph, they have Gaia. So if we look at Graph, they have a bunch more they offer, but let's go through one by one. So if we look at Gotham Graph, they have, so, just looking at this, it just looks cool. Look at all that. They have the perpetrator, I believe, in the middle, and they have all the links that they found. So they have the car that they use. I don't know what that is. That's a binocular. Then they have an agent, have another agent. So that could be a informant that's linked with the criminal, who's linked with another informant who's something or other. So basically, they're saying investigators can map out key pieces of evidence associated with an entity of interest, such as phone records associated with a suspicious phone number. Analysts can explore relationships between different parts of the computing software infrastructure in order to analyze and understand cyber threats. So if we look at what else they offer. So they say Graph provides a whiteboard-like interface for users to explore, visualize, and interact with entities, their properties, and their networks. Users can create and edit data in the graphs and resolve duplicate objects and ensure robust data quality. Graphs can be extended by plugins, including support from temporal analysis histograms to identify patterns in data and network analysis tools. The key word there is plugins. If they're anything like the App Store, like if this service becomes an app store where just trying to think here. So they can do a tiered structure in terms of the app store, where if you're a a small level client, you can use the basic services in terms of data analysis. If you're a really high level client, you can use all these other plugins, all these other features that come into place, and maybe even you can even use a professional service, and they can build customized software just for you, where they roll out personalized software for you, and that could be another tiered revenue source in the future. They don't, that's not something they do right now. They said it can be extended by plugins. So I'm assuming they include everything, and you can just, obviously use it to make a more robust data analysis with regards to this graph side of things. And now we look at the Gaia. So that's Google World Map right there. So soldiers can plan and execute complex multi-unit missions while incorporating the latest intelligence data. Analysts can track vessel movements and identify what? Vessel movements, okay, and identify if they stopped at suspicious ports. Wow, very useful. And then they have Stencil, which, this is scary. Like they can have a look at the actual place live, and they can identify each object. Obviously, this is all written up by an officer who's understanding what's going on in that place, but nonetheless, they can have a look at it. I mean, a soldier can fill out a form requesting logistical support from an adjacent military unit and get what can they get? And get it approved by her commander. Okay. Yeah, I'm not too sure. Like, they haven't explained it. They've given an overview of how the product works. Obviously, you know, with regards to the emerging growth company filings and just the fact that we don't use the software, it's understandable why I don't understand what's happening here, but it looks really cool. So a police detective can fill out an interview report which combines structured and unstructured data provided by a witness. Okay, so is that in Spanish? Oh. Team is able to disable IED manufacturing from facility and collect additional intelligence on a person or capture this person. Hydra operatives are aware of the operation and prepare defenses. The team is met with counterfire. The team is unable to effectively disable the IED manufacturing facility and can't capture that person of interest. Wow. So that's based in the operations side of things, where each unit can talk with each other units and fill out it's like Slack for governments or armies. And so on the dossier, it's a investigator can use a dossier to turn a complex investigation into a shareable intelligence product, which other collaborators can read and edit the same documents. So this is like Google Docs. This is like Google Maps. This is like what can this be like into? I think Visio. I think Visio is done by Microsoft, so where it's more integrated and very sophisticated. Gotham Video. Oh, sorry. Yeah, this is the picture. This is the video where they get live video. So analysts can monitor an aerial video feed and see overlays representing friendly units and equipment on the ground. Wow. And fraud investigators can comb through billions of transactions to drill down on suspicious accounts and seamlessly enrich them with data from the other sources integrated in Gotham. So yeah, this is not like a one-side thing. They can use all the software together to understand where exactly this happened. So they obviously got the time, the MSREL to USA. I don't know what that is. So they got the date, the amount, the transaction ID, and they can track it. USA to AUS. So I'm assuming that's United States to Australia. Beneficiary country is Switzerland. So the money, the $10,000 is going to Switzerland. I'm just really trying to understand what's going on here. And then they have the transfers of the timeline. And then they also have the phone calls. Okay. And they have AVA. AVA's can automatically prompt analysis to investigate a new report regarding suspicious activity that mentions a suspect they were investigating previously. Yeah, look to see. So AVA is an artificial intelligence system. Okay, so that's why it does that. So it automatically does it when there's a new report, and that seems suspicious to AVA, and it's like, hey, bro, this guy's back on your radar again. You want to just check it out? So it's an artificial intelligence system that scans billions of data points in order to assist investigators in defense and intelligence sectors, among others, with identifying patterns and connections. So the sheer volume of inbound data can make it challenging for institutions and their experts to triage information in real time. This can cause analysts to miss key leads. AVA supports investigations proactively, running around the clock against internal and federated data streams. It alerts users to new, hard-to-find potential connections across billions of data points, ensuring that analysts spend their time on the most important investigations. Jesus. And they also have a couple of others like forward and mobile, which they didn't give a picturized view of. But they seem quite interesting. So forward is a specialized configuration of Gotham designed to support operational continuity in the face of unreliable networking environments. So built on top of the proprietary data synchronization technologies, Forward enables disconnected analysis and operations by providing Gotham services that can be run on a ruggedized laptop with no network connectivity. For example, soldiers from one command unit can use Forward laptops to synchronize data and analysis between headquarters and operators in the field, as well as with troops from different command units around the world. So they don't need network connectivity, basically. Forward basically gives them their own network connectivity. Wow. So mobile brings Gotham into the field of mobile devices, hence the name, to provide support for real-time distributed operations. With their Android and or iOS devices, users can file field reports, upload photos and video, track the locations of their teammates, and search and explore data integrated into Gotham. So basically, they take all these products and put it on a mobile phone. So going forward from Gotham, we're going to be looking at Foundry. So Foundry is mainly utilized by the private sector. So Foundry transforms the way organizations operate by creating a central operating system for their data. Individual users can integrate and analyze the data they need in one place. The speed with which users can experiment and test new idea is what makes the software stick. So they have Monocle. So Monocle enables users to understand and manage data lineage in Foundry using a graphical interface. Users can explore upstream dependencies or downstream consumers of data in Foundry, as well as trace logic for a dataset back to its source. Users may also use Monocle to manage build schedules or track data health and permission issues. Monocle graphs are fully interactive, and users can drill down on any source on the graph to engage with the specific source or system. So moving forward onto the contours of things. Contour enables top-down exploration of large-scale data. Users may filter, join, or visualize datasets in Foundry, including those With millions or billions of records, users can use contour point and click interface to answer analytical questions and publish the results as a report or as a new dataset in Foundry that will automatically update with underlying datasets. And then they have Object Explorer, which looks intense. Data engineers can create customized view of objects important to their institution and share these views with other operational colleagues. Okay. And then they have Fusion, which is basically an Excel worksheet, but with more data analysis capabilities. And they have code workbooks and artificial machine learning. So this is the key thing. So these things can be actually I guess modified by the data scientists themselves. So Palantir gives out this software, and the government can hire data scientists as well, their own data scientists who can work with the software for their particular needs and get the Palantir's engineers as well, and they can all work together to make it more customized to that particular need. So code workbooks basically gives data scientists can prototype new machine learning models and quickly connect them to operational workflows. So they're creating new sets of code. In artificial intelligence and machine learning, so data scientists can write models that detect suspicious transactions and alert financial crime analysts to potential money laundering activity. So yeah, crazy. And then they have reports where analysts can create live views of business KPIs and automate standard reporting requirements, replacing static snapshots with dynamic content. So now we go to the spreadsheet. So they're quite so yeah, as I said before earlier in the video, they only are required to report like the last 2 years as per the emerging growth company clause. So that's all they did. So if we look at their growth in full year 2018, they had $595 million. Full year 2019, they had 742.5, and full in the past 2 quarters, they already made 481.2. And we can see that their cost of revenues are going down as well, as more of the revenues come from these scale customers. And the fact that their IPO is going to, I believe it will lessen their sales and marketing expenses, as companies will become more used to Palantir, as they'll be more open to Palantir, as it is a public company. Previously they were just a government contractor, or that's what they were known as being, and now they're more a public company. They work more with in the commercial space, and they showed us that most of their revenues actually come, not really most, but 51% or so, or 55% they said, I think, come from commercial customers. So they are moving into more commercial space, and that's great to see. And their cost of revenues are going down as well. So we can see that it was 24.5, and then it became 28, and in the past 2 quarters it was 22. And even though in the past 2 quarters they were needed more, as a lot of the companies used Palantir software to allocate PPE into key states of the United States to kind of understand how they should be distributed for the best outcome. But their net income has been negative for the past couple of years, and recently it has gotten down less. So we can see that full year in 2018 it was nearly 600 million. After 2 quarters it's 164. If that trend continues, they're more or less half their net income loss for 2020, and going forward we should be expecting a profit from the company. And if we look at the operational expenditure side of things, very low operating expenditures. Sales and marketing gone down like crazy, which is very much understandable, as they're now they've got their products, they've got their software, they're able to integrate more with the customers, they're able to offer more professional services, and they're more in the public space. So they have to rely on this less, and they can focus more on the R&D side of things, where they have increase revenues and are continually going to increase revenues. That's what their S1 filing indicates anyway. They're going to keep investing highly into research and development of their platform, offer more services to customers, offer more integrated services to customers. And even though this might eat up their overall net income, I believe it's good for the longevity of the company. I mean, the company only IPO'd like 2 weeks ago, and they've only been around for 17 years, and they've only recently figured out their their commercial aspect of things. For a long time, they have struggled to figure out how can we take this software that is held closely by the government and is seen in some aspects as a negative to the democracy, because it's if you look at what the software can do, it's more or less spies on people, um, and it can figure out things that you wouldn't want to know as a private citizen, or a public citizen, as a but if they used it in the right way, and they are planning to do that by only partnering with democracies, liberal democracies, so we're going to see more and more put into that space, and obviously general admin. Yeah, I think they need a lot of lawyers for the work that they do. But if we look at the contribution margin side of things, it's been expanding like crazy, especially with the court case that they won, and they're able to 10x their revenues from the government, and they've nearly doubled it. Not nearly doubled it, but increased it by 50% one more time for the first half of 2020. So we can see a further increase in contribution margin. And if I do a modest growth rate for I mean, if we look at other offerings, other IPOs that have come out, they're basically expecting like 100% growth rate year over year. So the stock's at $10. I mean, so it's going to go up to 58 if we expect it to be growing like other companies, but I don't think so. And if you look at other companies as well, that's the growth rate. That's only for the revenues. We're not even looking at the PE ratio. If I do a PE ratio similar to AMD, similar to Square, similar to essentially all tech companies right now, they're sitting at an average PE of I think 40. I mean, if you look at Apple, it's at 39. Amazon's like 100 or more. Microsoft's at 35. Facebook's around 35. A lot of these other companies, other growing companies into the AI space, such as Nvidia, Square. What else is there? Tesla, a big one, which is at 1,000 PE. But I think that's fair for Tesla. But if we look at the company and we give it a similar ratio, 35, or actually let's go 30, just to keep it conservative. $87, 100x growth rate, but I highly doubt that. I mean, even though they are more or less doubling it each year, and by my numbers, I expect them to be at least, I think they said they're expecting around $1 billion in revenue this year. So it'll be good to see. I mean, that's going to increase their reporting requirements anyway, so that's going to be good to see. So yeah, so I'm expecting them to be 10% growth rate, $14, which is a 40% increase from their current price, 20%, 80% increase from their current price. So the company has a long way to go. I mean, they've just IPO'd, I think, and based on the net income, and they for the most time, they have been very much integrated with the U.S. government, and even then they were cut their revenues because the government wasn't denying their ability to use their software. So as we see more integration with governments, as we see more integration with other governments, and we see that they become more a part of the commercial space of things. And the great thing about this company, the great offering that they give you, is that they're not a data mining company. They're not going to take your data and sell it to anyone. They are going to companies with your data already, with your consent. They have your data, like JP Morgan, all the banks, all the airplane companies, the government, credit card companies, car manufacturers. All these companies have data already on you, from your details to where you live to how you buy. If you look at even supermarkets, um, they have all the data already. And all Palantir is doing is making sense of that data for that company and charging them a price. That's all they're doing. So if there's no privacy concerns when it comes to Palantir, I believe anyway. I mean, they've publicly disclosed in their S1 filing that they're not a company that collects, mines, or sells data. They're just a company that analyzes data. They just give you, and they work with the actual businesses that have your data, and they go, or have my data as well, and they go, okay, here's size data. We see that he's purchasing these things at these times, and he's going to these places, and he's doing whatever. Let's see how we can make sense of it so you can be more effective in your ability to retain this customer, get more attention from the customer. So they're a company that mainly focuses on analysis of data than data mining. So security issues aren't really a thing. Um, Security issues, I mean, in the technology that they offer, security issues can pop up. But if the data analysis side of things, because the data is given by consent to these other companies, so analyzing it isn't really a problem in terms of like any claims or lawsuits coming against Palantir for spying on people, because they're not spying on anyone. They are giving their software, which has the ability to spy on people, to companies who have your data with consent. So that's one thing. And apart from that, they're a very sticky company. I mean, most of their revenues are coming from companies who have stayed with them for a long time, and they continue to stay with them. They continue to expand with them. They continue to be more integrated with Palantir, and across the platform, they're very much a solid company with the high growth potential, high margin potential, and I'm a long term holder. And with regards to the founders trust, Thiel and Carp, I'm more than happy to leave my shares with them. Um, I've understood the philosophy of Thiel, or I think anyway. I understand where he stands in terms of politically, um, and it's very much understandable why they would want to keep this kind of um, companies closed off, because as I said before, this technology does have the potential to spy on people. So having the ability with founders such as Peter Thiel, Alex Karp, and Stephen Cohen, and them being aligned with liberal democracies, so it's understandable to see why they would do that. If let's say they didn't, and this was just another public company where people can own a lot of shares in, activist investors can come in, activist investors can buy billions of shares in the company. I mean, they're only valued at being 13, I think they're roughly $15 billion now. So it's not much. I mean, Elon Musk can buy out the company with how much money he has. So, or Bezos can buy out the company. So it's understandable to see why they would not do that, because even if Bezos came in and bought all of the shares of the company, he still wouldn't have the voting power to direct the future of the company, because it would be in the hands of Thiel, Karp, and Cohen. And the moment that, as I said, if Bezos buys out the entire company, that would be, yeah, that would get to 50.00001%. So he would have more power than the founders voting trust. But if one of the members drops out, then automatically the other two members gain more voting power. So yeah, so no matter what happens, it's in the hands of the founders, and it's really a company where if you trust the founders, you should trust the company. Um, And I just don't mean that in terms of the financials. I mean in terms of the future direction of the company and this future safety of the company as well, because their technology is quite remarkable, and it's understandable to see why they would want that to be in the wrong hands. But with that being said, just gonna I just want to say thank you for watching this video. I just want to say thank you for sticking with me for an hour and a half. And hopefully you learned a few things about the company. You understand their founders' trust, what that entails for the company, and also what they offer. Like the product they offer is quite remarkable, as I said, and this is really what you're investing in when you invest in Palantir. This ability to gain deep insights into data and from what they say, help with fraud investigations, help with counterterrorism issues, and other such things that go on in the world. So, yeah, so I just want to say thank you for watching this video and thank you for listening. And if you have any questions, thoughts, or comments about Palantir, or if there's anything that I've missed about the company, I know a lot of things have popped up over the past 2 weeks as they have IPO'd. But if there's anything I missed, if there's anything that I should know about, please leave it in the comments below. And I appreciate your time and take care.